Right. First of all, let me thank the organizers, the Hellenic Observatory, and also thank the Hellenic Observatory in general for the very nice work that is doing on issues related to Greece. Now, Kevin's question was a slightly different one to me than to the rest of the panelists. It was, what was the Greek experience of EU-recommended structural reforms? Now, let me start from a non-academic point of view. Between 2012 and 2014, I was chairman of the Council of Economic Advisors. Greece has the strange attitude of sending as a representative to the Council of Economic Advisors, to the Euro Working Group and the Economic and Finance Committee, the chairman of the Council of Economic Advisors. Therefore, all the other countries have bureaucrats or top bureaucrats or politicians. Greece has academics. Anyway, so I was there. If somebody was asking me, let's say before 2012, whether it would be easier to cut salaries and pensions by 20% or implementing structural reforms, I would probably reply that this person who asked the question was probably not in his or her right mind. It turned out that this is not the case. It turned out that the issue of structural reforms is far more difficult than the rest of the fiscal measures, the very severe fiscal measures that we have taken all these years. From this point of view, Greece is not an exception. Repeatedly, in the Euro Working Group, we had precisely this discussion, how difficult it is to implement structural reforms in any country. In all the countries that we can think, this discussion was coming up all the time. Now, why is it so? If you go to the academic literature, both in economics and in politics, there are two main reasons that are identified there. Normally, when you have a good structural reform, and I will come back to this point later on, you may have that very large segments of the society benefit. However, they benefit very little out of it. Whereas the losers, they lose big time, usually. And in several instances, the losers are very well organized. In several instances, they are very close to the government. And in several instances, they manage to overthrow the whole reform process. The second one has to do with timing. Normally, in order to reap the benefits of a structural reform, it takes time. There are studies of the European Commission indicating that in order to have the full benefits of particular types of reforms, of course, it differs quite considerably from reform to reform, you need to have 4 to 6 or perhaps to 8 years in order to have to reap all these benefits. Therefore, there is a natural tendency in the politicians saying, okay, not for me, for somebody else later on to undertake this reform. However, the longer you delay a reform, the more difficult the reform is later on. Now, related to this, to the latter one, is a third factor that I think that the literature does not consider. Before the implementation of the reform, you do not have the countervailing forces. Once a reform is implemented, there are strong forces pushing for keeping the reform. Nobody today would argue that we must go back to the good old times of having only Olympic Airways. However, before there was the liberalization of the market for the airlines and people could enjoy, let's say, the benefits of having competition there, seeing what are having, let's say, workers in other companies and so on, this could not happen. Now, are all the reforms desirable? Economists use a criterion, the so-called Hicks-Kaldor criterion, which simplified says that a reform is desirable if the benefits of the winners can overcompensate the losses of the losers. In fact, there are some welfare wage there as well, but I ignore them for the matter, at this moment. However, there is a question that suppose that we have a desirable reform. Should we compensate the losers? The answer is not necessarily. In this example that I gave you before, if you have, let's say, a monopoly, and we break up the monopoly, we must not compensate the monopolist for the loss of this welfare that they were causing to the entire society. Now, let me go now to, after this introduction, let me go to the Greek experience. In Greece, usually the Greek crisis was portrayed as a fiscal crisis. However, the root of the problem was loss of competitiveness. The main problem that we had was reflected in the balance of payments problem that we had. And in fact, from this point of view, all the countries that they got into a program, an economic adjustment program, Greece, Ireland, Spain, because Spain had a program as well, Portugal, Cyprus, they had a common feature. They all had problems in the balance of payment. It was not that there were other countries with higher debt, like Italy, Belgium, and so on, that they did not get into a program. Now, in Greece, the balance of payment in 2008 was a tad below 15% of GDP. These are staggering numbers. Just to give you some sort of an idea, the then government in the mid-80s, under Mr. Simitis as finance minister, adopted severe austerity measures when the balance of payment deficit reached 6.5%. In the late 2000s, the deficit in the balance of payments was almost 15%, and we were doing nothing about it. Now, therefore, the Greek program that was adopted there, in some respects, it was a typical IMF program for countries with twin deficits. What were the common characteristics? One, it was, let's say, that you undertake fiscal consolidation so that you reduce the fiscal deficit, and also you undertake structural reforms so as to solve your competitiveness problems. Nevertheless, I must say that it differed in two important aspects from a typical IMF program. First of all, it didn't have devaluation, fortunately. However, it didn't have debt haircut, unfortunately. Let me return to the reforms now. In the years of the programs, there were numerous structural reforms adopted in Greece. This can be testified by several international organizations that look at reforms like the Going for Growth of the OECD or the Lisbon Council and the Better Bank and so on. Don't get me wrong, I do not say that Greece all of a sudden became the paradise of reforms. We were starting from an extremely low base, and after all these reforms, we simply reached the bottom of the distribution of our partners in the European Union. Reforms were politically costly. Most of them, however, were long overdue, and these were the type of reforms that we needed to undertake ourselves. We didn't need foreigners to come to Greece to tell us that our pension system was unsustainable. At some time, the explosion would have been huge there. We had to do it ourselves. And there were several other examples like that. Now, in Greece, however, there was some kind of a difference, although I have seen similar cases in other countries as well. In the period of the programs, many ministers were going to parliament saying that, okay, vote this reform. This is not our reform. However, if we do not do it, the country will collapse. There were exceptions. There were ministers who were defending their own reforms, saying that this is something good for the country. It is not in order to avoid bankruptcy or something like this. However, I'm afraid this was the exception rather than the rule. Now, where it was some kind of, it is natural, it happens in all countries, that the losers resist the reforms. There is always, you can see, let's say, all these things about whenever there is a reform in the common agricultural policy, huge demonstration of French farmers, etc., etc. This is not something uncommon. What was the difference in Greece in comparison to the rest of the countries that got under a program was that in Greece, to a very considerable extent, there was no plan. The first time that the Greek government presented some kind of a comprehensive long-term plan, an outline of a plan like that, it was only in 2014, and it was overthrown later on. Unlike Greece, there was only one country that was standing out from this point of view, and it was Ireland. When Troika was going to Ireland, they had something saying that, okay, this is compatible with our program. We will not do this, we will do that. To a lesser extent, this was the case in Cyprus and Portugal, although it was a bit mixed, the record there as well. Therefore, this brings me, let's say, to the magical question, the million-dollar question. What was the thing? It is ownership. If a government does not believe in this reform process, sooner or later, either they will implement it wrongly, or they will overthrow the reform process itself. This is why what is happening in Greece in recent months, in my humble opinion, it is dangerous. There are several ministers who come out and say that as soon as the program is over, we will overthrow several of the reforms undertaken before. This is, let's say, like a recipe to give a signal to the market that this whole process will stop there. We are going to the bad times of the old time. Now, as I mentioned before, in my opinion, we have to continue there, and we have to continue the reform effort unabated. This is a point I only partly disagree with Paul, because we are very far to the left of the curve that you mentioned there. The two most significant areas where we have to continue is in public sector reform, including sectors like justice, education, etc. And also we have to continue with product market liberalization. Product markets in Greece with a myriad of arrangements are still quite closed. Now, if I have 2 minutes, can I continue with something else? Since the panel is about Europe and structural reforms, there is a question, and this is something that is related to debates that take place in the European Union right now. Reforms are primarily a national domain, a national priority. Should the Eurozone materially support reforms? A superficial answer may be no there. However, we must take into account that in a monetary union, all this lack of reforms may have externalities, negative consequences. Therefore, in several instances, the answer may be on the positive there. If a country is, like Greece right now, on the verge of being, let's say, between the markets or out of the markets and so on, it is extremely important to have some support in order to implement necessary structural reforms. Just to give you a couple of examples from Greece right now. We have the so-called auxiliary funds that are basically a pay-as-you-go instrument, and everybody admits that we must go to a multi-pillar system with occupational funds. Transition will create deficits automatically. Therefore, we need some support there. In our education system, we are in desperate need to support and redesign completely technical education. This is not an easy process. This is something where you can link the two things, the structural reforms with funding from the rest of our partners. Thank you very much for your attention.
Thank you very much to each of my panelists. We have time for questions and discussion, challenge. I believe there are colleagues with microphones, so can I invite you to ask questions? We've got a question here on the front row, please. Perhaps we could take 2 or 3 together?
It's rather like a comment.
Please.
Is it?
Yes.
Yes. Okay, I come back to the question you posed, Kevin, earlier. I think the answer to if there's a capacity of the European Union to implement structural reforms, we saw that the executive arm of the European Union does not have the capacity, unfortunately, because some of us as federalists would like the executive arm to be able to implement or to convince the national governments to implement those reforms. On the other hand, we saw during the crisis that the intergovernmental branch of the European Union, the Eurogroup, had the capacity to convince national governments to implement the reforms. So also, we've seen the executive arm being scapegoated in Britain, like saying the unelected officials of Brussels would dictate us what we're going to do in our country. So unfortunately, reality says that sovereignty is more effective than the executive arm of the European Union.
Thank you very much. Do we have a question here as well, please? Over here. Yeah, okay. I'm coming round. Yeah, please. Try.
Yeah, okay, it works now. Okay, two brief comments and a question. The comments are the two difficulties in this discussion. The first one is that we seem to be subsuming under the general structural reforms title things which are very different from each other. And that makes it hard to get a sense of what we're talking about. Pension sustainability is not the same as privatization, is not the same as product market opening, is not the same as loosening EPL, etc. Second is that we are talking simultaneously about Greece, which is an outlier, and Europe. And while I find a lot to agree with what Paul was saying, I tend to agree more with Mr. Tsakloglou in the sense that we are nowhere near the peak of that curve. Now, my question is a conundrum which we have faced here throughout there is a question about the specificity and the extent of detailed instructions coming from Brussels with respect to reforms. If you look at it from an ownership, to come back to that that word point of view. The fact that we have started with some very generic structural reform agenda which became pages upon page of very specific recommendations / requirements is terrible for the country. At the other side of the coin is that this is the only way that a number of things could have been implemented, unfortunately. So the question is, as we move forwards to a new environment, which has some, obviously, conditionality, but not the same type, what kind of structural reform conditionality should we be looking at to reconcile the issue of ownership, but also the issue of effectiveness?
Thank you very much. We have several. I'm going to come to each of you, but this gentleman here, please.
Hello, my name is Alexandros Karidis. Let me congratulate you on your excellent input. And as representative of the London School of Economics Alumni Association, I have more reasons to be proud of this panel. I'd like to bring into the discussion the inequalities side. I think that there are many surveys proving that inequalities are not just morally unacceptable or unfair, they're also economically counterproductive, and they harm competitiveness. So I'd like to bridge this discussion with the previous panel about the fourth industrial revolution and the automation. There are certain future challenges that we need to tackle, and there is this open discussion about the minimum guaranteed income, if that is going to be something that we need as a safety net, or if it is a counter incentive for adaptation to future development. So I'd like to hear your view on that. Thank you.
Thank you. Could we take Michalis Yakubidis here, please?
Thank you very much. Michael Jakubidis, London Business School. I found it interesting that the academic analysis that certainly had an interesting plausibility when met with the empirical challenge, which is what Professor Tsakloglou had, might be qualified. And there's a lot of discussion of endogeneity there. So there's lots of questions about what is the cause and what is the result. So that at the macro level. But the questions that I have is a question of efficiency. And let me build on what Konstantinos said a moment ago, which is that we've got a number of different areas, all of which at the same time are being pushed to be changed. Do they have anything in common, or should we simply start being very separate about them? It seems to me that in Greece, the protection of the incumbents is the big ailment, and the incumbents with access to the government is the big challenge. So it may be that we want to address that. And I'll take to the second point that Minister Konstantinou mentioned, which is how detailed are we? If we look at the current lack of action and reform in public administration, we're going to see everyone agreeing that public administration must be better, healthcare, education, responsiveness, and then you look at the failure of doing what the MOUs had asked for years ago, and it comes down to the fact that when it goes to the parliament, the devil is in the details, it's not made mandatory, people don't want to push it, again, because we are protecting the incumbents and we are giving them protection. So what should we do in order to move away from that rather than taking the 30,000 mile view?
Thank you. And the gentleman here, please. Sorry, here on the second row.
Good evening. My name is Gerasimos Illinois Utsurouflis. I am I'm doctoral student at the University of Peloponnese. So I have one question for Mr. Paul Graus. So you noticed on your presentation that there are the investments that are the answer and not the reform, if I'm not wrong. So what I want to ask is, in Greece we have a huge conversation on the fact that we do not have investments because of the fact that the reforms are lacking. What is your option on that? Thank you.
Okay, I wonder, we'll come for another round of questions. I wonder if we can be really brief in some of the answers. Agnes, do you want to refer to the point about trade-offs?
Thank you. 2 points. First, on the ownership, I think Structural reform should be perhaps more managed. Well, the surveillance should be pushed to the output rather than input. I have two examples taken from my country. I used to be the chairperson of the Council of Economic Analysis, and there was a reform of the notaries with very good intentions, to liberalization, to lower the prices, and to improve the access to the service, and there's very good intention, and then the implementation was completely hijacked by the professions, and it had the opposite impact with a reinforcement of local monopolies. So I completely agree that a very good reform on paper can turn opposite. And my second example is, well, when I was at this position at the Council of Economic Analysis, I looked at the list was much less long than in Greece, but still there was a list coming from the Commission on the required reforms. And I suffered from the lack of hierarchy in the reforms. For instance, there was a couple of months where there was a window of opportunity to make really a big reform of apprenticeship, where several groups of interest were quite aligned, and the Commission came up with the same list exactly as the previous year. But the reform is a little depressing because I think there was a window of opportunity, and now that growth is resuming in France, immediately we have a shortage of skills. So this reform should have been done before. If I just can say a word about inequalities and structural reforms. It's true that structural reforms cover many things. Many reforms actually reduce inequalities when they cut rents, when they improve the access, for instance, to healthcare. This is a structural reform. I would rather oppose structural reform is a reform of the system rather than a reform at the margin. The reform at the margin is to change the VAT rate. The reform of the system is to introduce a VAT in the first place. So I would oppose in this sense, and this is why it's much more difficult, of course, to implement a structural reforms rather than a reform at the margin, because when you just change the parameters, people may not complain too much.
Okay, thanks. Paul, there were several points put to you. You need the microphone.
Yes, please do. Thank you. Yeah, thanks for all the comments. And of course, I have not been talking about Greece. I've been talking in general, right? And I do recognize that, as somebody said, Greece is an outlier in all this. And in my little graph, you may argue that Greece is on the left-hand side of the peak, so that there might still be progress to be made. I don't know. And again, this very much depends on the detail of the reforms, right? For some reforms, there's been enough. For others, not enough. I do share Kevin's point, that is that if there is one priority, it seems to me, it is institutional reform, right? The political system has to work. Because if you introduce, say, more flexibility in labor markets or whatever, in product markets, and you maintain a weak political system, in no time will it be captured again by all the lobbies, and you are back in the same situation. So it seems to me that that is the priority. I didn't talk about this. I did not put that in the item structural reform, but certainly it merits much more attention. So I think that's the priority. Don't ask me how to do it. You are a political scientist, Kevin, so you should have a kind of menu of things that the future Greek government should do in order to promote these political reforms that will make it possible for a market system to work, right? If you have a weak political system, a market system will not function well, right? It will quickly become crony capitalism. And that has to be avoided. And that is, I think, a major problem of this country. But I'm not an expert on Greece, so I don't want to say too much. One last point is about investment. This was a question that was raised there. I think it was quite foolish to say first structural reform and then you can do investment. I mean, that doesn't make sense. Surely this should have been done simultaneously. Funding should have been made available so that you can do public investment and private investment so that the country can get out of and can start growing again, because that is the condition that is necessary to do anything of importance.
Perhaps I can add to the couple of points which were made. I'd have thought that the fundamental challenge is that the combination of two facts. One, that some of our government institutions at the member state level are simply not up to the task of delivering reforms. Two, that at the Brussels level, the institutional capacity is lacking. Somehow we have to reconcile those two things. How confident can we be that in some of the states most in need of structural reform, that they could deliver those reforms without some kind of external constraints, without some kind of European technical support, or whatever it might be? This is the difficulty of combining those two things. I see that we're almost out of time. Can I take 1 minute? 1 minute, thank you. There was another question, please. This gentleman here, behind you. I will.
Thank you very much. It's more of a comment than a question. I'm George Simeonidis from the Regulatory Authority of Pensions in Greece. I would like to add to what Mr. Tsakloglou said before. He mentioned, I'm selectively highlighting here, he mentioned pension reforms and reforming in general, and how the weak lose, well, how people lose actually, but the weak in some cases, and how some people gain some things. What happened in Greece, maybe add to it is reparation, because if people who lose a lot, then sometimes we have to go back and help them,
okay,
even in retrospect.
Panos, last word.
Right, very telegraphic kind of replies. George Papakonstantinou question, ownership. This is the question. If you have ownership, you do not have to do all the things in detail. And this happened in Greece as well. We were in badly need of reform in tertiary education. This was something that was done internally. We did it without any instructions from outside or anything like that. In other areas, we were promising reform and we were not delivering. And then they had to go to precisely. Now, to the question of Professor Iacovidis, and actually it is in combination to Alexandros' question about inequality. First of all, in all countries, reform resistance comes from the incumbents. Greece is not strange from this point of view. What makes Greece a bit peculiar is the strength of the vested interest. This is something that where Greece is truly an outlier vis-à-vis the other countries, and this came, to come to the question of equality, during the crisis, most of the rhetoric was, let's say, of what happened with pensioners, etc., etc. In the meantime, the relative position of the pensioners in the income distribution was going up. There was almost nothing for the outsiders. Who were the outsiders? The unemployed. And this is the real disaster that happened there.
Okay, I appreciate we're out of time. We've covered... How could I deny it, a colleague?
It would have been very unfair to take your point. One, telegraphically, in answer to Yorgo, there is a J-curve in structural reforms. Things get worse before they get better. And that says that we should need to look at them in detail. GDP growth is the product of productivity and employment. It's that simple. Act on productivity, act on employment, test any structural reform for both, get the sequencing right, pick the low-hanging fruit, and that's how you reconcile your question.
Okay. It is the tyranny of short time, but can you please join me in thanking my panelists for the discussion?